I've done more than 100 YouTube videos about investing, and today I'm gonna tell you what I've learned throughout my journey in less than 10 minutes. As you can see right here, I'm currently on 101 YouTube videos, and throughout my journey I've learned quite a lot. But remember, I'm just like you. I'm still learning about investing. I'm still developing and improving. I have made mistakes and I will make mistakes in the future, and hopefully you can learn from my mistakes as well as my successes. One core learning that I've really stuck to throughout being public about investing on the internet is this core simple idea of following value creation processes rather than following stock price developments. Longtime viewers of my channel would know that I've stated this multiple times related to Novo Nordisk. Just because the stock price is going down, it doesn't mean that the company is deteriorating. Just as well as just because the stock price is moving up, it doesn't mean that the company is improving. The stock price is an expression of a bunch of people bidding up the free cash flows of a company. And this, in the short term, is driven by sentiment, and in the long term, this is driven by free cash flows. So over the long term, the value creation processes that drive up the free cash flow creation for a company will move up the stock prices, because these will continue to incrementally increase free cash flow per share. So as we can see right here, this is the free cash flow per share of Novo Nordisk. And we see this continually going up, but not consistently. But over the long term, we can see that the stock price actually does follow the free cash flow per share developments, right? But sometimes the stock market bids these free cash flows up way too high, and conversely, it bids it down too low sometimes. And what is up to you as an investor is to determine whether there has been a deterioration to the company's value creation processes. And in order to do this, it is about really understanding and knowing what the value creation processes are for the companies that you hold. So what is it that for this company drives up revenue, drives up free cash flows over the long term? What are the structural, both societal and internal inside the company processes that drive up the free cash flow per shares? It can be external factors such as global megatrends. Obesity is a global megatrend. Digitalization is a global megatrend. Artificial intelligence is a global megatrend. Now, it is up to you to figure out and really understand whether your company is gaining from this global megatrend and what is proprietary and internal to the company in terms of really driving up value over the long term. What do they offer their users? What do they offer their customers? Why are their products best? And what allows them to keep their products being the best products that are out there, right? So for Novo Nordisk, I've stated multiple times that there are 3 value creation processes that I track: them expanding and developing their global production infrastructure, them succeeding in terms of expanding the obesity market, and them succeeding with their pipeline. For other companies, it can be a lot of different things. For Nubank, it could be the total amount of customers or their ARPU, right? So what allows this company to increase their free cash flow per share? Now, I'm not saying that these are the value creation processes that you should track, but I'm just saying that there are some fundamental factors in the company that you really just should focus on. Do not focus on share price swings. Multiple times when it comes to Novo Nordisk, I've stated this, and longtime viewers of my channel would know that I've stated this and beaten the table multiple times on this. In 2025, when the stock price rallied up towards 400 krona, so that would be about 60 US dollars, I said that you should not get euphoric. You should focus on what are the internal things in the company driving up the value over the long term. So what will allow them to increase their free cash flow per share over the long term? And I stated those 3 value creation processes that you should track, rather than tracking stock price swings in the short term. I said the very same thing in January this year, when the company's stock price rallied over $60 a share. Now it's back down to under $50 a share. If you let market swings and price fluctuations dominate and dictate your investment success in the short term, you will likely lose money. You are likely to underperform. It is about tracking what over the long term moves up revenues for these companies. For Meta, I've said, and I've used multiple times, these examples of there being 2 core ways that they drive up revenues. It is about them presenting for their audience entertaining and engaging content, while them driving up their monetization on that content, right? On that engagement. And for the companies that you follow, it could be a lot of different things, right? For Palantir, what I tend to track is not their stock price fluctuations, but their ability to create value for their customers. So basically, if you let short-term volatility and price fluctuations dictate and determine whether your investment is a success or not, you could end up in a situation like this. So I said before that sometimes the market participants and markets just in general bid up the free cash flow way too much for a company, and sometimes they bid them down way too much. So for Duolingo right here, we see that the stock price has bottomed now from being over $500 a share to now being around $113 a share. Now, looking at this, you would think that the underlying company is performing horribly. You would think that the underlying company's business model and value creation processes are in decay and that they are rotting, right? But this is just not the case when you look at the company's free cash flows developing over time. As we can see here, the free cash flows are increasing over time, while the stock price is down by so much, right, over the short term. So over the short term, sometimes market participants can bid down the free cash flow, the future free cash flows of a company way too irrationally. And if you let these market fluctuations determine your investment success, you will get burned. So figure out and wonder, okay, so what is it for Duolingo that drives up this free cash flow creation? So for Duolingo, it is about their learning outcomes and their engagement on their platform, them driving up their user base, them driving up monetization for their user base, them converting their free users to paid users, and their ability to do this, right? Their success in terms of employing A/B tests and really iterating and improving their platform. This is what drives up the value for Duolingo, not the short-term price, not the short-term stock price. When you focus on the short-term stock price right here, you can get dizzy, you can get burned. You let this determine your success for investment and you will lose money. Don't worry about it. Don't even start investing if you think that your investment is a success based on stock price fluctuations. So in the more than 100 videos that I've made, the core learning that you can pull out from these is that you should focus on the processes that drive up value creation for the companies that you hold and not focus on short-term price fluctuations. In the short term, these price fluctuations are determined by narratives. In the short term, these price fluctuations are determined by sentiment. So for Duolingo right now, the sentiment is very negative, but the value creation processes, when you dial into these, you'll see that these are exponentiating. The ability for the company to drive up their free cash flows aren't deteriorating, but actually improving. So you should be able to, and when you invest into a single company, you should be well aware of what drives up the value for these companies. Internally, externally, what are the global megatrends that it lies under, right? What are the structural things that carry this company internally and externally? Yeah, guys, that's basically it. So before I leave, I would like to play you this clip of Jeff Bezos talking about what I've just said in this video. Let's hear what he has to say.
The stock is not the company, and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way.
So thank you for watching, guys. I appreciate your time, and I'll see you in the next one.